All right, this is another monthly recapping the month of September 2023. Recording this on October 1st, a Sunday. Very solid month. Can't complain. 20 grand, which is what I hope to do every month for the rest of my life. Really came down to a few good trades, which most months do, few good days. This month, all that yellow you see on the screen was me not being at the market, actually being away. And right here on the 14th, I just added in the total profits that I made from the 13th to the 18th because I was in and out trading CGC while I was away on my laptop. And I don't have the exact dates and really was too lazy to go back and put it all in here, but I'll have it uploaded to Profitly. But that was about 10 grand in profits for those few days, which, the third week here really made my week after, my confidence was in doubt after a losing week, red week, because normally I don't tend to have red weeks if I stick to my patterns, my process, my plans. But never let it shake you. You move on and you see what could happen after even a losing week. Next week, very solid gains of 4 grand, went away again, and then closed out September with just a modest week at the end. Tried to push it on the last day and lost. No big deal. Sometimes I like to do that. So a few key points that I'll go into more detail with on individual plays and at the end of the video. The key points are understanding a curse play, I call them, and when to quit it, the importance of liquidity with increasing size, why you should always hold a piece using a break-even stop, do not let one day, week, or month shake you, one ticker is all it takes, one good trade, and stay the course. So let's just jump right into some of the trades I made this month. And I'm only going to go over a few, the ones that really stood out, that taught me something, gave me a good lesson, some of the wins, some of the losses, where I could already tell you the only big loss I had on one ticker was on the 29th here. The other ones in here were just a few scalps and cuts, nothing crazy, nothing too important, just plays that didn't end up working out. But let me just go into the main trades that you could really learn something from. So VFS was the first one. And VFS was a big runner. IPO'd, dipped, went on a huge run from the 20s, almost up to 100. I missed out on the red day and backside, sadly, like an idiot. But I tried to play it for a listed first screen day because if you know anything about the listed first screen day pattern, big runners, as Gritani would say, of 300% with 7 million liquidity, blah, 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 end up having, solid bounce days after a first red day. So that's what I was looking for. I actually won a few times on it, playing it here and here, but then I kept losing on the listed first screen day. It would just keep failing, as we see on this daily chart, failing. Small bounces, but nothing much down here. And I don't even have to zoom in to an intraday chart here because I just want you to learn the mentality behind this trade and why you should just leave charts like this alone. And this is just my perspective. It's not tested or proven. It's my theory that when you have a massive runner like this that starts coming down, you have a lot of people that trade penny stocks, a lot of novices, people with less experience, and they see a chart like this and their eyes glow up. They love looking at stuff like this, love the big runners, love the action, love the liquidity, love everything about it. But I think they get a little overzealous. They like staring at the shiny object. And they keep attempting to buy it because they, I'm sure everyone's heard of a listed first screen day bounce pattern if you've been in the trading world for, more than 3-6 months. So every day they'll keep trying to play it, keep trying to play it. They'll go, it was a huge runner. It has to bounce. It has to have a green day, has to have a great bounce, has to have a great bounce. And it keeps failing. These longs get very stubborn. And as a more experienced trader now, I've learned to just let it go. If a big runner fails to bounce 1, 2, 3 days, at that point, just let it go. If it bounces, who cares? You're just going to end up chewing away your profits, which is basically what I did on VFS. I made some gains, but I would say I probably broke even on the ticker overall on the long side, looking for that green day. Eventually, I think it was right here, the first or maybe even the fifth, where I just said, just leave it alone. It's not worth your time. Know when to quit it. When a chart looks like this, and there's been plenty of charts like this where they look so good, the pattern is, and this is a keyword, too obvious. That's when it tends to fail. When things are too obvious, they usually, I don't want to say always, usually tend to fail. So be aware of that. When you see a pattern and you see a play, especially if you're not as experienced and you think it's a home run, as more experienced traders, they'll look at it and they might say, the novice is thinking this is phenomenal, so maybe I'll be a little more patient. Maybe I'll size a little less. Maybe I'll ignore it in general, or maybe I'll wait for them to get shaken out and then I'll play it. So don't get too overconfident on it, on anything, and just understand it is okay to give up on a trade and move on. You know, it's about winning the war, and you could lose a few battles along the way. Long, long, long game. But moving on now into a play that did work a little better. ICCT had a nice big run to start the month. On the first here, we had a continuation of the first red day. I didn't touch this one until the 6th, and I'll zoom in and show you what I did before explaining the pattern and the mentality behind the trade. So again, it kind of ties off of VFS. We have this big runner from 2 up to 20. You know, we're running hundreds of percents. We come all the way down. Everyone's thinking, I missed the initial run. I need to find the bounce. To me, it was just a little too obvious. So if I'm playing the bounce, I'm looking to take singles, take my profits into quick spikes, because I know that it's still up from 2 to 8 or 2 to 6 or 2 to 10. There's still plenty of room for it to come down. So the pattern that I look for in this scenario is what I call a listed first green day short. You could call it a backside short, a bounce short, whatever you want to call it. So after the initial run, and it has dropped, confirmed really that, okay, we're probably on backside now. Honestly, I'm finding this is where the way easier, I don't want to say easier, but really it is easier, short opportunities come from on these trades. Shorting it up here in the 20s, to me, it's very risky. It's a lot more difficult. Even shorting it on the red days, it's almost counterintuitive. Short it on the green day. And if we zoom in, let me actually get into it so I could explain to you. So let's go on demand so we could really see it. So 9.6. So what I'm looking for on these patterns is the listed first green day play to play out. So in this scenario, it would be buying it in the morning over the high of daybreak. It spikes up, starts to fail, and then I would look to short it. This first green day I didn't play because the risk reward was too wide. It was $1 I was potentially risking, and it was just too straight up from the lows all the way to the high, so I didn't want to buy that. So instead I said, okay, the chart's still up from 2 to 10. There might be an opportunity to short it. And as I'm sitting, waiting, watching, it's just consolidating all day. And if you know anything about the listed first green day pattern, I definitely recommend watching it in Grittani's DVD, Tim Grittani, great trader. You know that in the past they have ran usually better than they do now. Now they spike in the morning and tend to fizzle and fade into the afternoon. And with the chart that's still up so much, I'm thinking to myself, okay, if I short this in the morning, which I did into the 11:15 perk here, I shorted it and I said, okay, I'm risking about $1 up to 10.50. I think I got a really good 9.40 average here. Maybe even 9.44, something really good. Because I said, okay, we're coming into the afternoon. Listed first green days tend to fail. The chart's up so much, this could fade. I could potentially swing it. And if we zoom out to the end of the day, that was really the last push. It started failing. I covered way too soon down here in like the 8.20s or something. Got a very solid gain, then just kept fading. And if we go back to the daily chart, we could see that it was a great swing trade for the next few days, really faded down all the way down to the fives. And then they just die out. So that was a good trade that I did, my first short that I felt confident with in a while. And it was really late on the backside after two red days and after a long setup failed. The next ticker I want to go into is CGC. Now, a lot of people, I'm sure everyone, was focused on CGC this month. This was the one ticker that I did really well on because I do very well with super liquid, especially lower price tickers like this. And this one I want to talk about on the 8th here, how I nailed the long but lost, which is crazy, but it happens. So if we go back into the on-demand so I could explain it, let's go to the 7th here. A pattern that I've recently been playing is, I call it a frontside momentum play, where we have a low price runner that's just churning big volume. It keeps grinding higher, grinding higher, grinding higher. And on this day in here, when I saw this wick dip all the way down, get bought back up, when it was down here under 70, I said, probably fades back down to 50. When something proves me wrong and it gets bought right back up, I say, I'm a little more interested in this again. Still holding volume, great liquidity, price is higher, and it's sustaining. So I was actually looking for a buy the next day. And let me go into the next morning and let's show some morning action. Just kind of go through it. What is this? 10 minutes at a time. So the next morning, I was actually buying immediately here at 76, and I loaded up because the risk reward was super tight. And if you want to just see that daily chart again, it was forming to be a nice breakout. Daily chart was super tight. I was saying, oh my God, this is going to break out. It's so strong, great volume. We move on. I sold a piece. I did sell a piece up here into the 82s, and then I was risking green red. Of course, I was risking green red and low of day area right there. So I cut it. We move on. And once I cut it, I just leave it alone. And it seemed weak to me, seemed really weak. But right here at 1020, I definitely should have reevaluated, which is actually a new part of this pattern that I've looked into, where if I cut something in this scenario and then it barely breaks down, which it broke down, another penny or two, and then proves me right later by continuing the trend because I was long, it started to go higher and it continues the trend, I should re-add, maybe with half size, maybe with 3/4, maybe with full. It's all different based on scenarios, but I definitely should have been rebuying at 77 or even 78. And if we go to the end of day, I'll show you exactly why. Because we went on a massive, massive run. And I was dead on, but, maybe made a few $100 because my timing was slightly off, and timing is everything. And if you're under PDT, this is definitely difficult getting in and out, in and out, in and out. But for someone like me that can get in and out whenever they want, that's over PDT, definitely be okay, I've learned, especially in this market with algorithms and all this crazy, crazy volume and trading going on, everyone trying to make money in the stock market. Be okay with cutting your trades sooner than others would. So, instead of cutting it at lower day, I cut it here when I felt like it wasn't going to work, took some off. Be fluid. Don't be rigid with your exits, I would say. With your entries, be very rigid. Very important to be rigid. With your exits, be fluid. Feel it. With my experience, I'm able to feel how a trade is going to work. I can feel the tape, feel the price action. In this scenario, it just got so heavy in this, whatever was 20 minutes here in the morning, that I got nervous. I said, maybe it's a fake breakout. Now we reverse and go back to 50. I was wrong. I was dead right, but I was so wrong, which is fine. And then as we see, come the next Monday, we just went crazy. And this is a scenario where you could swing a piece, move your wrist down here to green red and then let it run. Now, the one thing I did right here, I did scalp it into this liquidity. which I do well with. So I actually shorted it here in the morning in the 130s, cut it when it came up towards high of day because there was just so much strength on the tape, so much volume. And normally, like I say, plays like to break down towards midday. And if they're not, and the volume's sustaining, you should definitely be cautious. So it started coming up, and I actually went long again here, 140, scalped it out here, said, okay, maybe it breaks out and retraces. I thought maybe it's over in here. It's going to die off. Again, proved me wrong, proved my mind wrong in the moment, held up, had a tight consolidation. I rebought it here, 146, scalped out again, played this dip, scalped out, and made a pretty solid day out of it. I think a $2,000 day out of that, actually. So whenever there's liquidity like that, I'm going to be there. I'm going to be scalping, and I'm going to be taking advantage of that. So this is what the daily chart looked like. And the next day I actually missed the short, missed the green day, but I nailed this bounce day on 9:15. So again, this is that bounce short, list of first green day is short that I like to play, that I explained on ICCT, the previous trade. In this scenario on 9:15, if we go to the 1 minute, and I could show you where my entry was, where my exit was, and all that. Actually, we're going to need a 20 day. Okay, so it made the huge run, had the red day, bounce day that I missed. Now we come into this second day of the bounce, and we gap up. We seem like we're strong, but remember, we are backside now, so naturally the stock's going to be heavier, a lot more excess supply, a lot more overhead. So I'm always a little more pessimistic, and I'm always pessimistic when being long, or when there's strength. I'm always pessimistic. I think it's going to end sooner rather than later. Always, whenever something looks very strong and good, I get scared and I leave it alone, or I short it. So in this scenario, CGC, this was the second day of the bounce. We had a nice big morning spike. We cracked VWAP, and we started to get a little heavy in here. So I think I was shorting at 144, risking the highs. And really, everything I do comes down to great risk reward. So I'm risking 10 cents here, thinking I could fade this back down towards $1 within a day or two. I think I shorted like 15 or 20,000 shares. I don't remember exactly. It perked up, which scared the crap out of me, honestly, but stuffed this 150 level, which was nice. The previous high here, stuffed it and just cracked. I added in down here after this hard crack because I said, if it's going to fail, it's most likely going to fail now. When, look at the time again, into noon. That's when things usually fail and fizzle because the morning buyers say, frankly, they say, screw it, F it, I'm out, I'm done. And they're either going to come back and bid it back up, or shorts are going to get squeezed, or it's just going to fade off. This one ended up fading off. I covered half. And then for the first time, I actually swung short overnight, which I'm terrified to do. But I said my average is good. It's such a thick liquid name. I'm short in my speed trader account. I could wake up early just in case, which is 4 a.m., which I did. And the next morning, I was up watching it. And then, sometimes it's good to be lucky. I got lucky, hit the offering at 8 a.m., got out all under 120. I said, screw it, let's take those gains. And I think I made close to $4,000 overall. Let's think. Yeah, close to $4,000. I think 3,600 overall on this short setup. And, that was really a big chunk of my month, too, this short setup here. So sometimes it comes down to just one play. And in this scenario, CGC, this one ticker after these 2 days or whatever, I think I missed one of the trades here, but it doesn't matter. The moral of the story is one ticker could make your month. One good trade could make your month. So, just stick with it no matter how difficult things get, no matter how emotionally, unsound, disappointed you are. Stick with it. If you have a pattern and process that's proven and works, stick with it and you'll be fine. If you don't have a pattern or process that works, work to find it and then stick with it. The next trade I want to go into is NVOS on 920. This was another nice big runner. Liquid, volume. Just a little side note too. I was long here on 911 because it was that front side momentum trade I look for. A big spike, lots of volume. Was having somewhat of a green day. Had a great average. Sold it way too soon. It ended up running, 100%. Missed the short, which I normally do. Wow, going back, I really trade pathetically, but, I still do well. And on 920 here, I played the bounce day. After a big retracement, I thought, okay, the volume's still sustaining. We're not going to, but we potentially can have a solid bounce. If I could find a good risk reward, I will trade it. So, was it this day? Yeah, right in here. MVOS had a morning spike right out of the gate. I said, shit, might not work. My risk reward is all skewed. I don't want to be buying it over high of day and be risking low of day, 4 cents, when I think I'm only going to make 5 to 10 on a bounce. So as we're consolidating, we got tight right here. We had this low, had a higher low, started to get tight. Volume came in, and I just loaded up. I think I got like 60,000 shares. Sometimes I just keep clicking and clicking and clicking, and then I have more shares than I really want. I had 60,000 shares here, and even though I was dead right, it was the biggest mistake I made having too big of a position, because mentally and emotionally it threw me off right there in that moment where we were breaking right through high of day here, right here, and I was already taking some off. Took the rest off here, not waiting for the hard crack. And I was out all right here. And then I look back and I said, why did I sell my whole position? And it's because I was emotionally, without really knowing, kind of subconsciously, much more nervous with a bigger position than I really wanted, which really wasn't that big of a position, but I just felt like maybe it's not, because like I said, I'm always super pessimistic when I'm long. I say, what if I just got in at the top and now it flushes, which I really have to fix and trust the patterns, trust my process, like I said. But it ended up running nicely. But the best thing I did, where was it? I think the best thing I did, I got out here and then it wicked right back up, held, and I said, screw it, I'm going to get back in. I got back in, I think at 27, might have been right here, and I just put my stop at this low. And I just said, it's the momentum's either going to carry or it's going to die. And this is more of my experience reading the tape and understanding that I normally sell too early. Spiked up, and I sold the rest right into this push, and done. Fairly solid trade there. One of my better ones of the month. But definitely need to hold a piece is the key. Hold a piece. Same day on 920, NKLA right here. Same thing. Big volume, big liquidity, nice runner, low price. If we go back to 920 right here, I just nailed this one for a morning spike. It had a quick dip, reversed, super tight risk reward. What am I risking? 3 cents. Notice that trend, how tight of risk reward I'm playing on liquid names that have volatility. You don't have to make $1 to make money. I'm risking 3 cents, and I made about 8 to 9 cents on this, which is 3 to 1 risk reward. Locked in, really sized up here, locked in a grade, I think like $1,500 or $1,600 gain. And that's exactly what I'm looking for. That's an A+ trade, A+ setup for me. Now to get into my last 2 trades I want to go over. Femi on 928, which will tie into that MVOS idea of why hold some. And I always sell too soon. I don't know why I do, but I'll work on it. So let me explain the daily chart first. So Femi was a big gapper with SLNO in the biotech sector. Went from 30 cents up to $1.60. Had a red day. So right there, that fits my list of first green day criteria. Was still trading decent liquidity. The next day, it opens. And here, it opens, was really weak. I tried it here and cut it because I was like, the liquidity's not there. The volume's not there. It just might die off. And then it was going sideways. Really held, notice again, tight risk reward. I mean, right here, I said, screw it. I'm going to get back in at 104, 105, risking to 102. I was risking 2 to 3 cents. With slippage, I said, because I was sizing up with slippage, I'm risking, 5 cents max. But I believe this could go to 120. So if it goes to 120, I'm making 15 cents, 3 to 1 risk reward. And, it almost got me out. It got me nervous for sure, but it was holding up and then started perking back up. Little volume perks came in and I started adding even more. Spiked right up, sold some into 115. Thought maybe it could be dead, but then I actually said to myself, because of MVOS, I should definitely be patient, definitely hold, because I always sell too soon. Perked right back up, sold some through 120s, got some at 124, and then was all out right here around one average out, I think like 117 or 18. And I actually held a piece, risking 111, which stopped me out. 4,000 shares left, stopped me out. I said, the play's probably done now. But if we go back to CGC on the day when I missed the long on September 8th, that idea of if you cut it, but then it proves you right, get back in, maybe a half, maybe 3/4, maybe full size, it depends. So if we go through this, we could see right here, we got super tight again, almost like MVOS too, that MVOS chart, super tight risk reward. We came up, boom, perk through right here. I was thinking about getting in at 118 with a 113 risk 5 cents. And I said, if this keeps running, looking at the daily chart, it could potentially get back up. It could be one of those that gets back up, 130s, 140s, maybe even tries to break out. I've seen charts like this, like TUP. This chart looks like TUP from a few weeks ago. I was comparing it to TUP on these two to a few days here. When I had the run, the weak red day, and then boom, breakout. Look at Femi now. It had the run, red day, boom, breakout. So, yeah, I would have rebought it. And then if we go minute by minute, I probably would have been out right here in the 140s. If I was risking 5 cents, maybe 10,000 shares would have been a nice, solid gain. Would have sold half here, been done. But it ended up running. And then, if we go the daily chart, next day went ballistic. So, back to the point, always hold a piece. And then the last trade I'll go over, which has been decent to me so far. Not Friday, though, which is fine. So basically, I'll go into the mindset and the premise of this trade first. So, I know I'm up for the month. No matter what happens, I'm probably locking in a solid gain on the month. So sometimes I just like to say screw it and push it and go for it. So LIFW reminded me of like an MVOS chart where maybe it goes on a massive run, doubles in 3 days if it does the breakout, or a CGC. And I decided to go long as a front side momentum trade, as I call it, where I'm looking for super tight risk reward in the morning to buy on a chart that is low price with tons of liquidity, tons of volume, that's consolidating, holding its ranges. Most people, just call it buying breakouts, but I play it a little differently, why I call front side momentum. So Friday, I bought it in the morning, spiked up. I didn't sell any actually. No, I sold a piece in here. I always sell a piece. I'm always quick. Like I said, be fluid with your exits, rigid with your entries. It came down. I stopped out. It's like all my rules combined here. Stopped out, but then it started proving me right again. I rebought and I held. Stopped out in here, proved me right again, was holding up, rebought, stopped out by end of day. I just played it too much. I was really, looking for the home run. I should have left it alone into the afternoon because things tend to get weaker. And I lost about 1.5K on this, which is fine. Still did well for the week. And I just said, I'm going to push it. If it does work, I'll lose 1.5K, but it could end up being a 5 grand plus trade, which I'm still going to be watching, still going to be looking at in the coming days. Hopefully it holds up. The one thing that I did wrong, looking back, look at the volume. It just really dried up. and I shouldn't be pushing it super hard until the volume and the liquidity tells me otherwise. It's a little heavy in the 22s and 23s as well, so I'll be patient, still be watching it though. But other than that, I'll actually real quick go over my watch for tomorrow coming into the new month. Why not? So MVOS, I'm actually going to be looking for that front side momentum type of trade. Even though we're on the back side, I think it could be a backside kind of bouncer again with the volume it's showing. It's trading big volume, so I'll be looking for it to open up, trading like a super tight range, break out the morning high. I'll buy some, sell a piece, and hold a piece. If it doesn't do that and the risk reward gets too wide, like if it just starts panicking or spiking too much, I'll leave it alone, no big deal. And I just want to note the odds of me playing these frontside momentums are pretty low. It has to do exactly what I'm thinking in terms of risk reward, consolidation, volume in the morning. But I have an opportunity to play them every day on strong patterns. Like I said, LAFW I'll be watching. I want like a tight consolidation range like it did in here and a breakout primarily in the morning. And maybe we could have a breakout over 24, which could bring us to 26 or bring us to 30. But the volume's really going to be the key there. Femi, I'm definitely going to be watching it for a short, gapped up a little after hours. Let's see how it holds tomorrow morning. I'll either be shorting a gap up versus 362 or shorting it when it gaps down into any morning spikes. Maybe risking 3, not really sure. I'm normally not sure a lot, and I just kind of play it by ear. And then BNOX looking for that listed first green day pattern. We had a big run. We, faded, had the red day with some good volume still. So looking for that bounce day. And that's really it for tomorrow. The goal is going to be to just play normally. Don't go crazy with size. Get a feel what's working. October, typically it's not the best month for the stock market. So we'll see what's working, what's hot, what's not, and then kind of get into it as the week goes on, as the month goes on, and figure out if it's time to push it or if it's time to pull back. But I'll be doing everything how I normally do tomorrow. Like I said, not going to change my pattern, not going to change my process. And the last thing I want to talk about, I just want to review some of the key points for this month and really just dive into detail, hopefully give you some encouragement and really just reinforce to myself what's important and what's not, what I should be doing and what I shouldn't. So the first one is understanding a curse play. Like I said, VFS. Sometimes when things aren't working, the stock's telling you something. Just leave it alone and stop trading it. The second one, the importance of liquidity. So as I've been trying to increase my size, I focused on more liquid names. I'm not trading a liquid junk anymore. There's no real set dollar volume or this or that, but I've noticed follow the money, go where the big traders will go. I put myself in the shoes of big traders that trade, position sizes of millions of dollars. And I say, will they be trading this? If they do, I'll trade it because I'm going to be a big trader like them eventually as I keep sizing up. If they're not going to trade it and there's not enough volume for them, I say, then I should ignore it as well. That's how I think about it. 3, why you should always hold a piece using break even, as we've seen Femi, CGC. I mean, they just go ballistic. So I have to be there and hold a piece because you never know, that last piece is worth the risk. Number 4, which is very, very important, don't let one day, so I'm not going to let my Friday or my on the 7th bother me or my 26th. I'm not going to let that day shake me. They're red days. They happen. It's part of trading. It's part of business. I'm not going to let 1 week, like the second week of the month where I lost to start the month, shake me. And I'm not going to let one losing month, which thankfully I haven't had yet, but I've had close to a break-even month in May where I made $2,000, which for me was just a rough, bad month. So I'm not going to let one day, 1 week, or 1 month shake me, which ties into number 5. I'm going to focus because one ticker, which this month was CGC, one ticker or one good trade could make your month, could even make your year, depending on what kind of trader you are. And ties into the last point. Everything ties in. Stay the course. For me, I got to keep doing what I'm doing, stay focused, stay disciplined, stick to my patterns, keep a level head, and be smart. Have good risk reward, discipline, patterns, process. That's it. You know it. I know it. So good luck in October. That was September. And hopefully October brings another profitable month. Just stay the course, stay true to yourself, and good luck.